Let's begin with Session 1, Bookkeeping and Accounting. By the end of this session, you should be able to explain accounting, explain bookkeeping, differentiate between bookkeeping and accounting, and discuss the activities carried out to fulfill the functions of accounting. Meaning of accounting. Accounting is from the fact that resources are scarce, and those who are entrusted with the use of resources have to use them efficiently and render account or provide accountability of their stewardship of how those resources entrusted to their care were used. As such, it is important that transactions that take place are recorded through bookkeeping and a proper, clear, and transparent financial reporting system, which we'll come to describe as accounting. Accounting can be defined as the art of collecting, analyzing, recording, summarizing, presenting, and interpreting financial and operating data expressed in terms of money for use by management or economic entities and other interested parties in making decisions or for control purposes. The key issues involved or that can be gleaned from the definition of accounting include collecting and recording data that is financial in nature. Accounting is concerned with only transactions that can be quantified in monetary terms. Transactions that cannot be quantified in monetary terms are not recognized in accounting. 2. Processing of selected financial data. As we come to see, the information that is collected has to meet certain qualities, and then they should be in monetary nature for them to be recorded, then summarized, and then reports are generated. The outputs or the reports communicate to interested parties about the status of the organization, and it's from this report that the interested parties or stakeholders make economic decisions and also take control measures for the utilization of the scarce resources. Let's look at the difference between bookkeeping and accounting. Bookkeeping entails collecting, analyzing, and recording financial data. Accounting goes further to look at summarizing the information that is collected, communicating and interpreting financial information. So we can see that bookkeeping forms the basis of accounting. First, the information has to be collected, analyzed to meet the needs or qualities of financial information, and then they are recorded. Accounting now summarizes, communicates, and interprets the information. Legally, bookkeeping has no strict legal and regulatory requirements as compared to accounting, which follows laid down legal and conceptual regulatory requirements which must be complied with. Nature of books. The nature of books used in bookkeeping are not well defined as compared to accounting, where there are defined books that have to be kept. Responsibility. The one who does the work of bookkeeping is called a bookkeeper or an account clerk, and the one who is entrusted with the responsibility of accounting is the account officer or the accountant. Stages in the accounting process. The first stage in the accounting process has to do with collecting and analyzing information from source documents. When a transaction occurs, it must be analyzed to see that it is of monetary nature, and then the source documents accompanying the transaction must also be analyzed and properly filed. The source documents include receipts, paying slips, invoices, vouchers, among others. The source document gives evidence that the transaction has actually occurred. The second stage is about journalizing the transactions, which means that the transactions have to be recorded in the journals. The journals can also be described as daybooks. When transactions occur, they are first recorded in the daybooks. We have special journals and we also have the general journal. We shall come to look at the journals in detail. Stage 1 and Stage 2 are performed continuously as transactions occur. Stage 3 involves posting the transactions to the account in the ledger. Now, when the transactions are journalized, accounts have to be opened and recorded to reflect the journal entries. This process is called posting. That is, collecting the information or recording the information from the journals to the accounts. Special accounts are created to record this information. These accounts are stored in the ledgers. We have several ledgers. We shall come to look at the ledgers in detail in subsequent discussions. Recording in the ledgers or accounts are done periodically or immediately as in a computerized system. The next stages, from stage 4 to stage 7, can be described as end of period activities. Stage 4 looks at balancing of the account and extracting a trial balance. Now the account at the end of each month will be balanced and the balance standing on the account will be recorded in the trial balance. So the trial balance will indicate account with debit balances and account with credit balances. It is expected that at the end of the period, maybe at the end of the month or at the end of the year, the debit balances on the trial balance should be equal to the credit balances on the trial balance. In that sense, the trial balance should balance. That is, the debit balances should be equal to the credit balance. The information from the trial balance are then used in stage 5 to prepare the financial statements. The principal financial statements include the statement of profit or loss and other comprehensive income, the statement of cash flow, and the statement of financial position. These are the principal statements that are prepared using the trial balance. Stage 6, recording and posting adjusting entries. At the year end, there could be certain transactions that may occur which needs to be reflected in the financial statement. So adjusting entries are passed to reflect those transactions. In stage 7, we remember we defined accounting and the purpose of it is to help in economic decision making. It is important that the information provided in the statement of financial statements provided in the financial statements are analyzed and interpreted to give meaning to the figures and to assist in economic decision making. Briefly, these are the stages in the accounting process. In this session, we discussed the difference between accounting and bookkeeping, and also we looked at the stages in the accounting process. Thank you.